What's going on, everybody? Welcome to the show. Plenty of news to chat about this week. We're going to be chatting a little bit about, well, obviously inflation. We've seen some numbers come out of the UK and Canada. We're going to be talking about just the general economic turmoil that's been happening around the world, not just in Western nations as of late. We've got a DARPA report on how insecure Bitcoin is, which the legends over at Swan Bitcoin have fact checked. And we're also going to be chatting a little bit about some new stuff out of Fountain, out of Bitcoin Magazine, some new tutorials and stuff that I dropped this week. So lots to cover. Of course, this is live. Anything can happen. So I defer to my friend Bill here.
Do it live.
Okay. No.
We'll do it live. Fuck it. Do it live. I'll write it and we'll do it live. And thing sucks.
If you have not already, please do like, subscribe, share, smash that boost button if you're listening on Fountain. And I am Ben with the BTC Sessions. This is your daily session.
Hodl the Bitcoin.
All right, before we take a look at the news, let's see where we are in the market right now. We're sitting at 20,700 and 689. We'll just call it around $20,700 per coin. A single US dollar will pick you 4,833 sats. 90.83% of all Bitcoin has been mined. And in terms of fees, next block, 15 sats per byte. Anything beyond that, even 30 minutes, 1 sat per byte. It's been kind of all over the map a little bit, but if we look at mempool.space, like it's only a couple blocks deep. So like you're pretty safe with some low sat transactions. So don't worry too much about those spikes in fees. We'll just say it's been kind of intermittent. It's been a little volatile in terms of there'll be like bursts of transactions into the mempool. So just be conscious of it. Shout out to sponsors of the show, Shakepay.com. If you're in Canada, easy way to stack sats. E-transfers in and out, no deposit or withdrawal fees, thin spread. You can use the link down below to sign up. And after your first $100 purchase, they'll give you $30 for free. You get the same deal referring friends and family. You can shake your phone every single day for free sats. They have Sats Back Visa card. They have Shakepay where they pay for your purchases from time to time. Just out of luck, I've had that happen a couple times. Tons of ways to earn additional sats. So check them out. Links are down below. LEDN.io, you can use your Bitcoin for a ton of different things. In particular, if you're in a pinch, like I have been, cash flow times where you need dollars and you don't want to sell your Bitcoin, well, you can deposit here, get a loan of dollars to your bank account within 24 hours. And when you pay back those dollars, you get back the same amount of sats. They also have savings accounts for Bitcoin and USDC if you're looking to earn a little bit of interest. They also have their B2X offering and Bitcoin-backed mortgages rolling out across Canada actively. Check them out if you're in Ontario, I believe BC at the same time, and select US states will start to have that rollout pretty soon. So keep your eyes peeled. You can head over to start.ledn.io/BTC sessions if you want to check any of that out. Up next, Bitrefill.com, easy way to start living on Bitcoin. You can pick up any gift cards you can imagine with Bitcoin, both on-chain and via the Lightning Network. You earn sats back as you shop. They also have a referral program to earn additional sats. And if you're in the US, they've just rolled out bill payments. So even further help with living on that Bitcoin standard. Check them out, bitrefill.com. Keystone, one of my most used favorite hardware wallets, 100% air gapped. You never plug it into anything internet connected. Everything's offline via QR code, scanning back and forth. Definitely upgrade to that Bitcoin only firmware. It works awesome with Blue Wallet, Sparrow, Spectre, Wasabi, you name it. Really good in a multi-sig too. So yeah, check it out. I've got a full tutorial on the thing. And privacypros.io with the BillFodl. If you're backing up any important hardware wallet or software wallet for that matter, you might want some peace of mind. Better than a piece of paper, getting it into solid steel is a much better option. So this is how I'm backing up my important Bitcoin wallets with the BillFodl. I've been using these guys for a long time. So check them out. Again, Links are down below. With that, let's turn to some of the news. We had a few numbers drop this week. A couple numbers in particular. Canada's inflation rate, now at 7.7%, its highest point since 1983. So Canada's inflation rate rose at its fastest pace in almost 40 years in the year up to May. As the price of just about everything continues to go up fast, uptick in gasoline was a major factor for the overall inflation rate. Gas prices rose by 12% in the month of May alone and are up 48% compared to where they were a year ago. Food prices also a major factor. Grocery bills increasing 9.7% over the past year. Within the food category, the cost of edible fats and oils skyrocketed 30%, the fastest increase on record. I did a throwback. I wonder if I can screw it. I'm going to bring it up because I thought it was pretty funny. I just tweeted it out before the show. I did a throwback Thursday for the Bank of Canada. Here it is. LOL, Throwback Thursday, Bank of Canada. This is a headline from July 29th of last year. Quote, "Don't overreact to temporary inflation," Bank of Canada governor says. Flash forward to Canada, inflation surges to 7.7% as of yesterday. So, yes. But it's not just Canada. The UK's numbers came out. 9.1%. Again, a 40-year high over there. Britain's inflation rate hit a 40-year high, 9.1% in the 12 months of leading up to May. Of course, the Office of National Statistics said consumer price inflation rose slightly from 9% in April to its highest level since 1982. Continued steep food prices and record high gas prices were, I love how they try to be, these damn economists, they always try to like spin it in a positive light. Chief economist Grant Fitzner said continued steep food prices rises and record high gas prices were offset by clothing costs rising by less than this time last year and a drop in often fluctuating computer games prices. Well, I mean, clearly a couple of those things are just a tiny bit more important than the other, but thank God those computer game prices have come down. The increase was in line with analysts' expectations and signals no quick end to the cost of living squeeze facing millions in Britain. The Bank of England says inflation could hit 11% in October when a cap on domestic energy bills is raised. So what they're saying there is that inflation is not even true because they've basically been subsidizing energy prices, and that as soon as those subsidies expire, the real price kicks in, and then that puts them into double-digit inflation territory. And like, I'm not gloating over here because Canada's heading the exact same fucking way. Like, it's not looking so peachy over here either. It's crazy. Now, there's so many fun gaslighting articles coming out as well. This one from the LA Times. Yes, a recession looks inevitable, but it may not be that bad. Here's why. And then they go on to say whether it's President Biden insisting a recession is avoidable or his critics arguing that the wolf is at the door, both sides are acting as if the nation faces an unprecedented catastrophe. Partly it's political theater, Biden fighting on behalf of an already beleaguered presidency, and many of the doomsayers hoping a downturn could be the coup de grace for Democrats. Behind the rhetoric, the reality is that recessions are a normal part of American economic life. The U.S. has had one on average every 6.5 years since 1945. And in the present case, most professional economists think any downturn now is likely to be relatively mild with a fairly quick recovery. Luckily, economists have been incredibly accurate the last little bit. Like the time that they said that the new Fed policy shift would have no major impact. They said, and this was in 2020, a couple years ago, those economists, they were right on top of it because they said in a landmark shift, to a more tolerant stance on inflation, the Fed's new monetary policy strategy pledged to address maximum employment by letting inflation run above its 2% target and suggested interest rates would stay near zero for years to come. The September 8th to 10th poll showed the Fed's preferred inflation gauge, the core personal consumption expenditures price index, was forecast to average 1.3% this year, 1.5% next year, that's 2021, and 1.7% in 2022, largely unchanged from the previous poll. It's at 6.3% right now, by the way. But anyways, here's some more on economists calling it. Inflation is hotter than expected, but it looks temporary and likely won't affect Fed policy yet. Consumer prices rose sharply in May. By the way, this is 2021 in June, with the CPI jumping 5%, more than economists expected. Stocks rose and bond yields fluctuated after market pros decided the hot inflation report won't lead to any changes in the Fed's easy policy. Economists said there are signs that rising prices could be temporary since they are centered in areas impacted by the pandemic. Inflation was temporary. Well, first, inflation wasn't coming. It wasn't going to happen. But don't worry, then it was temporary. Well, now, again, investors are worried about inflation data, but economists see it as a sign of temporary growth. So actually, it's a positive thing. This was also in 2021, but for years, economists worried that broad macroeconomic changes in aging population, fewer babies, the advent of automation would keep prices anchored for decades. But with the Labor Department's most recent inflation print spooking stock markets, investors are antsy about the return of inflation. The recent pickup of inflation may, in fact, be a temporary and welcome change for those who fear a slowdown in U.S. GDP. So those economists, they went from saying, well, inflation's just not going to happen, to inflation's temporary, to actually inflation's not a bad thing. And we see lots of cope of how we're going to deal with inflation now. Many asserting that spending more money will stem inflation. Again, like the gist of it, the president is focused on inflation. And in fact, Build Back Better is a long-run investment to increase economic capacity so we're better able to address inflation. Parts of the Build Back Better include addressing costs such as prescription drugs. It includes making investments to make the transition to clean energy, which we know we need to be making as well. So it's not the kind of dollars that is stimulus, it's investment. And it's the kind of investments that actually pay for themselves over time. So that's smart economic policy right now. Again, you can't spend your way out of inflation. If you're injecting more money into the system, it's going to cause inflation. And the crazy thing about all of these articles that come out and blame the war or blame COVID, no, it's our responses to those things. It's a monetary phenomenon. That's why it's happening. We increased the monetary supply by 40%. By 40% in like a calendar year. Of course, that's going to affect prices. And there's just this denial. And if you say, well, it is because of the war, then why was inflation already running super hot, the hottest it had in decades before the invasion? It was already on this trajectory. Now, granted, it's not helping. It's definitely not helping, but it's not the core cause of it. More gaslighting here. Bloomberg opinion. Inflation is a lesson in appreciating what you had instead of just complaining about losing it. Oh my God, these trash takes. There was another one. I can't remember where it was out of, but in the past, I want to say month or two, where it's basically like, maybe the economy is bad because of your bad attitude about it. Like that was actually a headline, something to the gist of that. Basically, like it went from inflation is not happening to inflation is transitory to inflation is good to inflation is your fucking fault. It's like insane. Now, it's not just the West that's having trouble with this. like the canary in the coal mines are the less developed nations and what they're going through right now. We just saw Sri Lanka. The economy has, quote, completely collapsed. And this coming from the prime minister. And there's now riots and food shortages and fuel shortages. It's crazy. You see the same in Ecuador just in the past day. Ecuador, the economy has collapsed. The public are taking to the streets to protest against the cost of living crisis, cost of lockdown crisis, which is wild. And I mean, we see further unrest happening in Egypt and Lebanon. And this isn't the first time it's happening in Lebanon, but they've seen huge currency debasement. But yeah, they're warning that both countries face imminent political upheaval if their respective economic crises continue to spiral. So there's just a lot of stuff festering, and we're seeing it bubble to the top, and we're seeing these canaries in the coal mine. We're seeing things like Turkey. We're seeing things like Sri Lanka and Ecuador and Egypt and Lebanon, all these popping up. And like, how do you think Westerners react to that when we've basically, especially in the US and like the closest allies to the US, have had easy street because they're basically able to export their inflation, right? They're able to print money and purchase goods, like import goods with newly printed money, before the inflation of that debasement actually takes hold. So you're basically able to import resources for nothing, and then the people that receive that money, it's like hot potato, like flip it down the line to get something of economic value. And if you're the end person getting your hands on those dollars, it's going to purchase less for you. Other nations don't have the luxury of being able to have the world reserve currency and be able to purchase international goods with their printed currency. And I mean, there's people that are kind of seeing the disruption to the global monetary system as we know it for the past number of decades, one of which is, of course, Vladimir Putin. Now, this is not a endorsement of Putin himself, but he does recognize the writing on the wall. He is kind of privy to what's happening with the sanctions, and the kind of, I would say, the implosion of the US dollar as a world reserve currency. That is going away. That seems to be going away. People are moving away from default having US dollar reserves. It doesn't make as much economic sense, and or having treasury bills or whatever it may be. It doesn't make as much economic sense as it used to. So this is a little thread here. Putin just gave a speech with massive implications. Now, I mean, this is related to Bitcoin in that it's apolitical global money, but for global macro is what this is. So regarding the Forex reserves and assets, he said, the very principle of global economic system has taken a blow. Fundamental business notions as business reputation, the inviolability of property and trust in global currencies has been seriously damaged. When I spoke at the Davos Forum a year and a half ago, I also stressed that the era of a unipolar world order has come to an end. I want to start with this, as there is no way around it. This era has ended despite all the attempts to maintain and preserve it at all costs. On the use of sanctions, he said, sanctions as a weapon have proved in recent years to be a double-edged sword, damaging their advocates and architects just as much, if not more. We see social and economic problems worsening in Europe and in the US as well. Food, electricity, and fuel prices rising, with quality of life in Europe falling and companies losing their market edge. The European Union has lost its political sovereignty, and its bureaucratic elites are dancing to someone else's tune, doing everything they are told from on high and hurting their own people, economies, and businesses. Surging inflation is product and commodity surge in inflation in product and commodity markets had become a fact of life long before this year. The world has been driven into this by years of irresponsible macroeconomic policies pursued by G7 countries, including uncontrolled emission and accumulation of unsecured debt. Because they could not or would not devise any other recipes, the governments of the leading Western economies simply accelerated their money printing machines. Such a simple way to make up for unprecedented budget deficits. I have already cited this figure. Over the past 2 years, the money supply in the United States has grown by more than 38%. The EU's money supply has also increased dramatically over this period. It grew by about 20% or 2.5 trillion euros. We all hear about the so-called Putin inflation in the West. When I see this, I wonder who they expect would buy this nonsense. People who cannot read or write, maybe. Anyone literate enough to read would understand what is actually happening. So they printed more money. And then what? Where did all that money go? It was obviously used to pay for goods and services outside Western countries. This is where the newly printed money flowed. They literally began to clean out, to wipe out global markets. While at the end of 2019, import of goods to the United States amounted to about $250 billion a month, by now it's grown to $350 billion. It is noteworthy that the growth was 40%, exactly in proportion to the unsecured money supply printed in recent years. America's role has changed dramatically. It has turned from a net exporter of food to a net importer. Loosely speaking, it is printing money and pulling commodity flows its way, buying food products all over the world. The EU is building up imports even faster. Obviously, such a sharp increase in demand that is not covered by the supply of goods has triggered a wave of shortages and global inflation. Under the cloud of inflation, many developing nations are asked a good question. Why exchange goods for dollars and euros that are losing value right before our eyes? Global currency reserves are at 7.1 trillion and 2.5 trillion dollars and euros, respective. These reserves are devalued at an annual rate of about 8%. Moreover, they can be confiscated or stolen any time if the United States dislikes something in the policy of the states involved. I think this has become a very real threat for many countries that keep their gold and foreign exchange reserves in these currencies. A conversion of global reserves will begin. They will be converted from weakening currencies into real resources like food, energy commodities, and other raw materials. Obviously, this process will further fuel global dollar inflation. That's a lot, but it's correct, I believe. I think it's incredibly correct. I'm no fan of Putin, but like he understands kind of the macroeconomic implications of what these policies have brought us to, what point. And I think he's absolutely correct. Like, why would you hold dollars? Why would you hold government bonds issued by the US? Those things are being devalued at an accelerating pace year after year. Why would you store your economic value in it? It's like it's rotting away. And on top of that, there's the risk. If you're not like a direct ally of the US, the precedent has been set that, you know, you can be cut off from SWIFT and FedWire or whatever it may be. So yeah, man, interesting times. Let's move on. There was a report put out. Trail of Bits research report examines unintended centralities in distributed ledgers. And this was put together with DARPA, Defense Advanced Research Projects Agency, so arm of the government. But so they put out this report, and apparently it wasn't very good. Just so, I mean, part of the issue is they took a look as a whole across like the cryptocurrency space, quote unquote, and failed to differentiate between Bitcoin and like crypto. But even still, in specifying in relation to Bitcoin, they were just incorrect on a lot of things. Thankfully, dudes at Swan Bitcoin were there to go through and actually take the claims and then show the reality of them. So I'll just do a quick run through this. Claim number one, they said, even widely used blockchain, every widely used blockchain has a privileged set of entities that can modify the semantics of the blockchain to potentially change past transactions. There are currently 4 active contributors with access to modify the Bitcoin Core code base, the compromise of any of whom would allow for arbitrary modification of the code base. This is just so painfully incorrect already. And then they said false. This is simply not true in practice in Bitcoin due to the fact that users running nodes, not developers, decide which code to run. There have been numerous examples of this in the past, including users who chose to run code put out by pseudonymous developer because they wanted a particular upgrade faster during the block size wars of 2017, which went against the opinions of some highly respected Bitcoin Core developers who spoke out against running it. I mean, if you want any proof further that Bitcoin is decentralized, go back and read The Block Size War by Jonathan Beer. Excellent book, and it's just a recount of individual users flipping the bird to large entities, miners, the biggest companies in the space, all trying to change Bitcoin. The node runners win. Claim 2, number of entities sufficient to disrupt a blockchain is relatively low. 4 for Bitcoin, 2 for Ethereum, and less than a dozen for most proof of stake networks. They said this is misleading. The claim that Bitcoin can be disrupted by attacking the top 4 mining pools is flawed for several reasons. 1, mining pools aren't miners. Miners are globally distributed, often located in remote regions where power is cheap. Miners can and do easily switch mining pools. In fact, in 2014, miners voluntarily switched away from a pool that was gaining too much hash rate. Number 2, the attack has to last forever. As soon as the attack is stopped, mining can continue unabated. And number 3, if the attack on specific pools is indeed lasting a long time, it is easy for miners to regroup and still honest pools by changing a single line of configuration. Claim 3, for a blockchain to be optimally distributed, there must be a so-called Sybil cost. There is currently no known way to implement Sybil costs in a permissionless blockchain like Bitcoin. And they said, this is misleading. Again, a Sybil attack is one where someone may create many nodes that pretend to be honest nodes, but are actually malicious in order to trick an honest node into accepting invalid or untrue data. So basically, if you're running a node and people were able to zero in on it, then they could try and surround your node with like malicious nodes that have an incorrect copy of the blockchain. But like there would have to be so many of them that by default, you accidentally connected to all of them. You couldn't even have one truthful node that you connected to because that would trump all the other ones. Yeah. Again, it's just crap. They basically do a great job of going through all the claims. There's 13 claims here, all of which are fully or partially debunked or are just like totally irrelevant because they've misunderstood or misinterpreted the way that Bitcoin even works or functions. So they spent 9 years on this. Better luck next time, I suppose. Let's move on. UK to remove know your customer requirements for Bitcoin wallet providers. I mean, just on this, just on the title of this, how would they even begin to implement that? Like, they know that you can just download a Bitcoin wallet from the internet anywhere, like on your computer, right? I mean, they could implement some controls over app stores, I suppose, within the UK. But like, anybody can create a seed phrase. There's no way to stop that from happening. Anyways, this is the long and the short of what happened. UK plans to remove KYC requirements for non-custodial Bitcoin wallets. It's a major win for privacy and Bitcoin supporters. I mean, is it though? It's just the government suddenly being less stupid than they were, but like I wouldn't call it like a big win. UK Treasury released its June report wherein it claimed that there's a lack of evidence that non-custodial Bitcoin wallets are used for criminal purposes. Interestingly, the report acknowledged that many persons who hold Bitcoin for legitimate purposes use unhosted wallets, and there's no good evidence that said wallets are used for illegitimate reasons. Yeah, it goes on to just as a result. Okay, so to request Bitcoin wallet providers to filter transactions and collect user information simply shows how deeply corrupt and ignorant public bodies are these days. As a result, the UK Treasury will only rely on data collected by registered Bitcoin service providers regarding Bitcoin transactions, which pose a risk of illicit finance. So again, like their regulators are going to hone in on KYC services because it's the only thing that they can hone in on, right? You can't go and try and get every single Bitcoin wallet to collect user data. It's just not going to fucking happen. You can try, I suppose, but like, again, I don't think you're going to be incredibly successful there. Let's move on. I'm so excited about this. The new cover for Bitcoin Magazine. This is their third issue in their new series since they beefed up the magazine and done these quarterly issues. It's called the censorship resistant issue. If you're listening to this on the pod, on the cover is a picture from the Canadian convoy protest, and it's just like riot police in front of a Canadian flag. So this one hits home for me. The beginning of the year was a rough few months, and you know, I think it was one of those moments in Bitcoin history where a number of people had that light bulb go on and say, "Oh, this is why stuff like this exists," right? Like the Canadian government came in and basically retroactively made a protest illegal. They started freezing bank accounts. All of this is now being kind of brought up, and there's investigations into what went on and so on and so forth. And there is pushback there, not nearly enough, in my opinion, but you know, it was crazy to see how quickly it could go from, you know, there's a protest, and it was the largest protest in Canadian history, the largest protest in all of Canadian history. I'll say it again. But for the government to basically dismiss it, pretend that it was like a fringe small group of people, rather than saying like, hey, there's a large portion of the population that is upset about something, maybe this should be considered, and instead basically throw in the Emergencies Act, which gave them unprecedented control and start shutting down bank accounts and confiscating private property and so on and so forth. It was pretty wild. So this issue is going to be, again, focused on censorship resistance. There's a letter from the editors here. It says, of all Bitcoin's achievements, none are as vital to its design as its ability to unstoppably settle transactions. When all is said and done, Bitcoin is just speech, an exchange of numbers that mediates financial settlement between distrusting parties. It is by definition, neutral, impartial, a financial system open to teenagers, terrorists, and everyone in between. It goes on to basically say like, hey, you may not agree with some of the uses in this issue, may not agree with some of the topics at hand, but the point and the important takeaway here is that this is an apolitical medium that can be used by anyone. And that's by design. You know, the people you agree with and people you really hate are both going to be able to use it, and they will make the system stronger for one another. So that's the long and the short of it. I can't wait to get my hands on this issue. I've got a few of them coming. I think I'm going to have to put one of these on my wall. Moving on. Fountain Podcasts. Maybe you're listening to this on Fountain right now. If so, Smash that boostgrams button. So Fountain Podcast, if you're unfamiliar, it's for podcasting 2.0, value for value, streaming sats to content creators. And they just upgraded and added a function. You can earn Bitcoin by listening to your favorite podcasts on Fountain. So the time they put out a blog post here. The time and attention we give to tech platforms is incredibly valuable. Every minute that you spend consuming content, creating content, or viewing ads increases the value of the platform you're using. Most free apps we use today don't recognize or reward this, but Fountain is different. It's the only podcast app that rewards both listeners and podcasters for the value that they bring to the platform. So you can earn by listening to any of your favorite podcasts, listening to promoted content on the Discover page, and when other users like your clips or comments. So yeah, that's pretty awesome. I haven't gotten to test it out yet myself, but again, anybody that has been listening on Fountain, thank you very much for the stream of sats that I see coming into my node anytime anybody does. And also, I'm going to make a habit now for those of you that are on Fountain or Breeze. Breeze also does streaming sats, or any other platforms that implement this. I'm going to be reading some of the top boostergrams. So basically, and this is from my node here. There's an app that I can get from my Umbro called Helipad Boost Tracker. So if you send a boostergram and you leave a comment with it, then I can read all those. So I'm going to start reading the top ones from the past week. Of course, I hadn't announced to this point, but there is a couple here from the past week. Somebody said, and this is an anonymous user, a numbered user, but they said, thanks for all your instructional videos. Help me preserve my family's wealth for generations. Thanks, man. I appreciate that. And 1,000 sats from @the_Luke_Bird. He's a great show. Keep up the awesome work. So thanks, man. Thank you for the additional sats. And thank you for the previous people that have done boostergrams and everything like that. I see some back from the previous months, but I'm going to start reading these out. I'll try to read at least the top three, the top three boosted posts that I see in terms of sats every week on the news show. So if you're on that, then be sure to check it out. You can find me on Fountain podcast app, or in Breeze Wallet. They have a podcast function as well, and you can leave messages there. Moving on, I've got my workshop coming up in Vancouver. By the way, tickets will no longer be on sale as of, I think, the end of this weekend. I'll probably close them down. So just, if you're in Vancouver and you were looking at hitting one of these workshops, then be sure to do it before the weekend. So I'm going to be in Vancouver July 16th. I'm going to be doing a beginner workshop on self-custody in the morning that day from 9 a.m. to 12 p.m. And then I'm also doing an advanced afternoon workshop, a deep dive on the cold card. So if you want some hands-on kind of like individual attention, setting up your cold card, learning how to use it, well, this is for you. If you're in Vancouver, you can grab tickets on my website, btcsessions.ca/events. And tickets will no longer be on sale after this weekend, because if anybody orders cold cards or anything, I got to make sure that those are there. Okay. Speaking of cold card, I'm so happy about my most recent tutorial that I just dropped. Super stoked. I got to cover the cold card, of course, in depth. So, we're going to be covering a lot of this in the workshops. Some people just prefer that hands-on, like I need to be able to ask questions and have somebody like hold my hand as I do it. And so, but I wanted to do an in-depth video tutorial. This thing is a beast. It is 2 hours long. 2 hours long. So it starts with the basics. I cover the basics of like setting it up. I link it up with Sparrow Wallet on desktop. I show you how to do air gap transactions, how to update the firmware, how to recover your wallet. So the basics of learning cold card. But then the remainder is like all of the advanced functions, as many as I could cover in the cold card. So just so many things to cover. I've got to give, again, another shout out to Crypto Cloaks for sending me, and maybe I'll just get rid of their Crypto Cloaks for sending me these amazing cases for the cold card. Ooh, and it's designed by Madex or Spacebull on Twitter. Looks nice. Anyways, yeah, super excited about this tutorial. It's my longest tutorial I've ever made. You don't have to watch all of it. You can just do the basic section and then come back. But it's jam-packed full of information. So if you've been slacking on your cold card knowledge, you can either hit up this tutorial and do it yourself at home, or you can hit me up in Vancouver and make it out for that event. Either way, it should be a good time. But yeah, I had so much fun making this, and I've got to say, like, I'm that much more in love with my cold card now that I've gone that deep into it and used so many things. Oh, it's so cool. I love it. Anyways, I'm going to stop ranting there. And then obviously tomorrow, make sure you come back here. We got James Lavish. He's going to be on Why Are We Bullish, as well as Daz B. I hope I'm saying that right. And Seb Bunny. Both of them are from Looking Glass Education, which is a Bitcoin educational website that Greg Foss is involved in as well. There's a ton of great minds behind it, but it's going to be a killer episode. Very excited for it. So make sure you come and hit up the show tomorrow at 6 p.m. Eastern time. Can't wait. And with that, we're going to wrap this thing up. Again, thank you guys so much for watching and or listening. Like, subscribe, share. Those things are super important. If you're listening on Fountain, smash that Boostagram, leave a comment. Let me know what you thought. You can always check out the previously mentioned sponsors down below. Shakepay, LEDN, Bitrefill, Keystone, BillFodl. They're all down here. And if you really liked what you saw, you can drop me a tip at my Strike page, strike.me/BTC sessions. Get there, type in any amount you want, hit the tip button. You will see a Lightning invoice, or if you prefer, tap the arrow to the right. You'll see a regular Bitcoin QR code. With that, I'm out. Have yourselves a wonderful day or evening. See you guys next time for your daily session.
HODL the Bitcoin.